July jobs jumped. Hey, it's Eric Osses here with Homebridge Financial with my weekly update on mortgage rates and what's going on in the economy causing those rates to jump all around for the week ending August 5th, 2022. Well, the bond market got a shock Friday morning when July jobs numbers came in almost double expectations, up 528,000 jobs. Many of those jobs were replacing positions lost during COVID, especially education, health, leisure, hospitality, construction, and education. Well, anyway, strong number and well above expectations. Alongside the strong job creation, the unemployment rate also dipped a little bit, 3.5% versus forecasts of 3.6. And average hourly wages increased 0.5% against expectations of up 0.3%. These strong numbers created doubt in the markets as to whether we're already in a recession or not, believing it's pretty difficult to call it a recession with such a strong jobs market. And if our economy is really that resilient, it means the Federal Reserve will continue to aggressively hike rates until inflation falls under control. The next scheduled FOMC meeting is September 20th, 21st. A lot can happen between now and then, so we'll keep a close eye on the stats. Despite today's jobs numbers, mortgage rates improved for the week. So here is the national averages for mortgage rates. Conventional 30-year fixed rate, 5.09%. That's down 0.13 from last week. 15-year fixed rates, 4.5. That's about flat from last week. FHA and VA 30-year fixed rates, 4.7%. That's down about 0.05 from last week. And 30-year jumbo rates, 4.62%, down about 0.2% from last week. Another question today, right now, for our local market: are institutional investors buying residential properties in Washington state? The short answer is yes. According to National Association of Realtors, 15% of single family homes were purchased by institutional investors in 2021. That made it real challenging for a normal buyer to win a bid against these all cash buyers who had no contingencies for financing, appraisal, and offered to close in just a few days. Not only has it been difficult to compete against all cash offers, but those institutions made an already tight inventory situation even worse, snapping up about one out of every 7 homes on the market. Most institutional investors use a buy and hold strategy, collecting rent, counting on longer term appreciation. They'll eventually sell once their profit model for that property has been achieved. But in the meantime, they're going to push rents as high as they can, affecting affordability for renters and also encouraging our local governments to pretty much punish all landlords with tighter restrictions and limitations. Are institutional investors here to stay? There's record news this week of one that just raised $50 billion to go into the real estate market. So the short answer is yes. Although they may not be quite as active in the single family sector, inflation has made it a little bit more difficult for them to earn an acceptable rental yield on single family homes. They may look towards more other properties, other types of properties that will give them higher yields, like medical buildings, commercial multifamily, and even cannabis warehouses. That's the latest hot new sector. As a regular home buyer, you can still compete against an institutional investor by coming in prepared. Have a fully underwritten loan approval, a clear strategy on your offer, maybe even a love letter explaining why you would be the best buyer for this property. A lot of sellers still are not looking for the absolute best price. It can be a little bit of an emotional decision. So play on that and come in there guns blazing as well as you can. And if that doesn't work, you can also become an all cash buyer by using our Zoom Casa service. With a 20% down payment, Zoom Casa will purchase the property all cash and then sell it to you at the same price. That could be a really useful tool if the home you have your eyes on is a real looker. To learn more about becoming fully underwritten, Zoom Casa, or answer any other personal financial story problems, just reach out to me. You can email me, Eric at ericismybanker.com. Call me, 206 915-3742. Be sure to subscribe to my weekly updates. Just search YouTube or social media, Eric is my banker, and you'll find me. Hope this information is all helpful. Have a great week. Have a great weekend. Enjoy the summer. Talk to you next week.